Anyway, I might as well get started. So I'm John August. I'm one of the vice presidents of the Humanist Society, and I've been interested in economics for quite some time. So this is my latest encapsulation of what I see as important topics, things that I'm going to focus on. And look, there's things that I'm going to cover that, not everybody may be interested in, or, goodness. So it could be a struggle to keep everyone happy, but keep in mind we will have Q&A and you can bring up some other topics along the way. So here's a bit of an outline on the screen of the things that I'm going to be talking about. I'll sort of let you know that on the one hand, my viewpoint is what you might call 80% mainstream. So I will be pushing back against modern monetary theory, inhibited deflation and missing interest payments. And so I'll be, as I say, 80% mainstream, but a little bit of other stuff along the way. And one of the themes that I do have as things get towards the end is that basically capitalism is getting a lot worse than it was a few decades ago. It's sort of on a downward trajectory. Doesn't mean that I want to jump the ship to like communism or whatever, but certainly I think a lot of those stories which are trying to, rationalise capitalism, I think are basically wrong, and we'll sort of get to that as we go. Now, I'm going to start with the Reserve Bank of Australia and then move on to some history. So one of the big issues at the moment is the demon of inflation, and that's controlled through setting the interest rate. Now, excessive inflation is considered a bad thing, with the benefit worth the pain. So short-term pain for long-term gain. Now, that is reasonable in itself, but when you change the interest rate, some are hit harder than others. And you can wonder why we need such harsh medicine in the first place. For the recession we had to have, if you remember that far back, it does seem like it was the antics of the rich people, the bonds and the scases, that had consequences that the rest of us paid for. But there's worse things than excessive inflation. There's stagflation with high inflation and high unemployment at the same time. And beyond that, there's hyperinflation, which was experienced by the Weimar Republic in Germany before World War II, and obviously a few other countries around the world. Now, one of the things about monetary policy is that the Reserve Bank wants a certain amount of unemployment in order to control inflation, and that's called NIRU. So that's one of the important things, is that basically people who might work or not work, they're the ones who pay the price of managing the economy. And, that's there. I guess there are some issues with that. Now, so that's what but equally, if we don't keep inflation on control, maybe in the longer term we'll have a lot more unemployment. So there's the balance that we have. But if there's a recession, people's incomes decline or they lose their jobs. But if the economy is growing, interest rates increase, which hits labour harder, and there's also bracket creep, which means that the less well-off enter higher tax brackets and end up paying more tax. Now, taxes on assets are not directly subject to bracket creep, so it doesn't hit as hard. Now, taxation is supposed to correct this, but rather than wealth transfer from capital to wages, we transfer wealth to government. So while asset owners might pay more in 1 year, over multiple effects, these cumulative effects do hit others harder. Now, you could correct this with a guaranteed minimum income or negative income tax, and further land value taxation has a greater effect on asset owners. Now, a further problem is that the CPI or inflation doesn't consider how mortgage and rent captures so much income for many people. Now, and of course we have the Reserve Bank of Australia with Michelle Bullock, who's the current chair. Now, the RBA focuses on inflation and maybe also talks about economic growth and a little on unemployment. But the question is just what is inflation and why are we trying to get a grasp on it? Is inflation a measure of price increases that we experience, or is it this abstraction that we try to control the economy with? For many people, it doesn't reflect their lived experience. Further, it's an average, and it's been said that if your head is in an oven and your feet are in a freezer, on average you're fine. So averages can be useful, but I think they can also miss something important. Another option would be to increase land value taxes to slow down the economy and control inflation. In response, that sort of tax means that land values and rents would decline, and that would actually lower inflation. But in Australia, It's a state tax, at least land value taxes are state taxes, and they're not a knob that the Reserve Bank Australia can twiddle. Now, this whole thing about land value taxation, that was actually developed by Henry George quite some time ago. And I believe it has some definite strengths. If our tax base has more land value taxation, that means we're going to have a healthier, fairer and more prosperous economy. And there's some graphs that people come up with that is, I suppose, a normal situation, and there's the situation with land. So one of the things that the LVT advocates say is that that land value taxes can't actually be passed on to renters. I know that's a subtle interaction, and maybe we'll get into it later. So I would say it makes sense to tax land more than assets like shares, because if you're in property, you're excluding someone else from occupying it, but if you're holding shares and stopping someone else from owning those shares, that's not so bad. So the George's picture is something that I can really only touch on, one of many things I'll be talking about. But I'll also say that Georges tend to be blind to macroeconomics and monetary theory. Now, George's notions were developed in the 1800s before there were official interest rates. There were few buildings higher than 2 or 3 stories, and there weren't any motor cars that were contributing to sprawl and changing what our cities look like. Now, regardless, our economy has moved on from one ridden with stagflation. Productivity increases have been absorbed by business as increased profits rather than increased wages. We could increase wages by reducing the rate of profit without inflation. One RBA governor even said that we'd have a healthy economy if wage earners had a larger share. Further, unions do not have the clout that they had decades ago to get wage increases. It seems to me wages are influenced by power differentials, not just supposed market equilibria, with the power balance between employers and employees having favoured employers over the last few decades. Now, to correct problems in our economy, we didn't always have to increase interest rates. In times past, we had credit squeezes, but the result was the same, unemployment. Still, there's other approaches. I'm keen on a guaranteed minimum income, so at least there's not this bad thing of unemployment. It's not a case of employment or welfare. There's this in-between state which doesn't hit quite as hard. We could still adjust interest rates to reduce economic activity, but it wouldn't cut as hard. Now, there was a famous economist in times past, John Maynard Keynes. Now, he actually suggested that we should make hay while the sun shines. Now, if this were really done consistently, we'd have fewer issues. Instead, we don't really make hay, but go into debt in order to spend. There's also private debt, but it doesn't get as much attention. Certainly, if the government spent less, it would slow down the economy. And while of many problems with the Liberal Party narrative, here they have a point. We shouldn't be running deficits. Equally though, the Libs shouldn't throw stones. They didn't fix the problem being in office for 10 years. Why didn't the Libs' rhetoric end up as action? Partly, they chose the most offensive ways to try to solve the problem. For example, trying to cut Medicare and cut people off from welfare after 6 months. Further, going to one of the particular Prime Ministers we had, when Abbott was PM, he didn't know how to run an effective cabinet government. He wasn't able to negotiate with and empower his parliamentary colleagues, let alone being able to negotiate with the Senate. Into the bargain, he increased defence spending and had to deal with increased pensions. Further, as you know, the Libs stuffed up robo-debt. How could anyone have ever thought income averaging was a good idea? It ultimately cost more than they ever hoped to save. They've also made a hash of public service cuts. They would get rid of public servants, then realise they couldn't do what they wanted to do, then hire private contractors and actually end up paying more in the end. While careful cost cutting can be useful, this isn't what the Libs did, riding in on ideological horses, expecting they could magically fix everything. It's ideological theatre rather than something nuanced and data-driven. Sure, be prompted by ideology, but don't let it blind you. Speaking of government debt, some say we should never go into debt, and with too much eventually we'll have an unavoidable crash. I take a mixed approach, where the government spending during COVID and global financial crisis stopped our economy from crashing into a wall. Afterwards, we had to pay off the debt, but this was at least in principle easier to do because we still had an economy that was ticking over. However, you could say that our current economic malaise is partly a hangover from this time. It seems, for example, that the COVID stimulus pushed up asset prices at the expense of wage earners. So now I'll sort of take a look at some global financial history and go outside of Australia, some things that happened in the UK. Now, in the UK, they did ongoing money printing, and while at first it stimulated the economy and provided employment, at each cycle, printing more money generated more inflation till it became unworkable. Clearly, too much money printing causes problems, but back then it wasn't obvious. Back then, monetary policy favoured the working class, trying to improve employment. Equally though, some claim governments never followed the Keynes prescription of making hay. Well, maybe monetary policy is in the service of the business class, or maybe it's the result of the lessons of the past being learnt. Take your pick. But rather than printing too much money, if you print money at the rate at which the economy is growing, that extra money will fill in the space and you won't have inflation. Now that's Friedman monetarism. So this is Friedman. He's also another famous economist. Now, it would be good if you could do all government expenditure based on a growing economy, but you need to have that growing economy. And if all the government did was print money, well, you have to cut government spending by 2/3 or more, because the economy only grows at a certain rate compared to how much money the government wants to spend. But then there's another approach which is called modern monetary theory. That's another radical perspective. It claims government can print money to get necessary things done because government activity makes cash valid, together with there being some spare economic capacity. The only thing I agree is that there can be spare capacity, and there are limited times when you can take advantage of it. Now, Friedman-style economists claim inflation is always caused by too much money in circulation. While there's some truth here, I think it misses a lot. Money printing can mean inflation, but that could be commodity inflation, the price of the goods that we buy, or it could be asset inflation, the price of shares, the price of housing, the price of property. But importantly, at times, the act of money printing can prompt additional economic activity, which takes up the slack, avoiding that inflation. But it's a precarious thing, not something to rely on. A lot of the time, you're just making things worse. It's possible that in the UK, when they first printed money, it got the economy going, but it only worked once, and after that, more money printing only made things worse. But a push can sometimes get the economy going. There was a time when our Australian economy was in the doldrums after a recession. The fundamentals were good, there was nothing stopping growth, but there wasn't any. And then what changed things? We secured the Olympics for Sydney. It was that long ago. And that's when the orders started to roll in and the economy started to build up momentum. That's not money printing, but it shows the duality of economic analysis. At times, economics tries to ignore human psychology, imagining that we are robot-like automatons. At other times, they introduce human expectations like psychology. At times, expectations about inflation and what the Reserve Bank will do are just as important as inflation itself. There's nothing wrong with this, but I think it's worth recognising. I don't agree with the modern monetary theory claim that historically government taxation gave money its meaning. It's also claimed that the first use of writing was to track transactions. In fact, this was only true for one civilization, Mesopotamia. The earliest Egyptian writing was used to label jars and inscribe monuments. Early civilizations had to describe religious worship, inscribe temples, do administration, know what was in a jar, and keep track of transactions. And it was coincidence that Mesopotamia started out with transactions. Further, the sociologist Michael Mann, writing in the theory Sources of Social Power, he actually notes that in Mesopotamia they used metal, not coinage, for transactions. So ancient Egypt had state control of the money, or rather state control of the economy. They had taxes on farmed grains which were based on the flooding of the Nile. And they actually had something called a Nilometer, which measured how much the Nile flooded, and then they figured out how much they were going to tax people. So, but in that civilization, both grain and oil were used as money. Coinage was a practical innovation, nothing to do with taxation. You weighed precious metals to make transactions. If you used coins of fixed weight, you could count them without weighing them. Coins were valuable because of the value of the underlying metal. The legitimacy was not the result of taxation, but rather convenience. Roman coinage was different because the value of the coin separated out from the value of the underlying metal. It was transitioning to the fiat currency where we have bits of paper and they're valuable because they're deemed to be valuable rather than because paper is valuable. So that's the cash we use today. Now, in Rome, it was linked to taxation, but that was a new development. It wasn't the case before that. Now, Greek city-states did at times depreciate their currency, but it had public endorsement and wasn't linked to taxation. The constraints on the economy are around the available resources and possibilities rather than being financial, as claimed by modern monetary theory. It's a mistake to look at money when the possibilities it represents are more important. Money may not be perfect, but it does the job of guiding those possibilities. Further, in mainstream economics, there's the distinction between the real economy and the financial economy. But the economy can only do so much. This can be adjusted and even grown gradually, but you can't grow these possibilities at the snap of fingers. Printing money will not by itself mean the economy can do more. But as I've said, that particular depression that was helped by the announcement of the Sydney Olympics. Obviously, you can give the economy a push and you can make things happen when you weren't able to previously. Now, money printing in a regular context may not have the threat of hyperinflation, which is something where I agree with modern monetary theory. However, there's still the threat of excessive inflation, along with stagflation and wage price spirals around inflationary expectations. Having said this, I believe these concerns are not constraints on reasonable wage increases. Historically, stagflation was said to have two causes. A first was too much money printing. A second was a feedback loop involving inflationary expectations, where people's attitudes were important. There was the so-called Volcker disinflation, which cured inflation, at least in the US. There seems to be a reasonably straightforward mainstream explanation of why that cure worked, which seems to me a better explanation than anything that came out of modern monetary theory. Okay, now two other sort of mildly radical views are inhibited deflation and unsustainable payments, and I will touch on them briefly. They are things that are in circulation. Now, lower prices or deflation can mean improved prosperity. Some say this is a natural tendency which has been held back by reserve banks wanting to maintain a positive rate of inflation. In other words, this theory is that over time business makes stuff cheaper. They may maximise their profits, but things get cheaper over time. That's the background trend, and reserve banks are pushing against that. But if you look at recent history, the goal has been to reduce inflation, not increase it. And further growth also seems to have been a goal. Now, keep in mind that a price increase in one sector is not inflation. It's only inflation if there's an overall increase in prices. You don't have inflation in some sector, that's a price increase. And some people do get confused when they talk about those things. Now, yes, we have had price reductions in the tech sectors, but I suspect a lot of it is more useless features that we never use being added to a product, and then they claim that we're getting better value for money. So that's my cynical view there. Now, tech in the economy can also go backwards. Now, we've got hand car washers, when you might remember way back when those automated car washers were all the buzz. Now, we've also got dog working services, cycle couriers, and so on. So, what's going on in the economy is a bit more complicated. Now, another one is the idea of unsustainable payments. Some see our monetary system as unsustainable because there's not enough money in circulation to pay interest. Now, I believe that if you think about it, if you pay money off in interest, that goes to the bank, and then that recirculates as wages, other overheads, dividends, and interest payments. So if the people who've received that money, let's say someone has a bank account that earns interest, they grab that money, then they buy something off someone who is in debt to the bank, and the person who is in debt to the bank takes that money and then pays off their interest and principal to the bank. Now, there's a theory that this whole thing is unsustainable and will eventually collapse. I don't believe it is quite that bad. Now, it's also true that money is created when the loan is made and destroyed when the principal is paid off. That's something I can't really go into the details of, but the point is that while the loan is active, that money can be in circulation and pay off loans and interest, including that same person's loan. Now I will go to cryptocurrency and gold. Now, I think the critics of cryptocurrency are unfair, but equally I also think its advocates talk it up too much. So my position is, I guess, somewhere in the middle. So what is cryptocurrency? It's a digital code that's made scarce by design, and it's made valid through many computers distributed around the world agreeing that it is. This is a guarantee against forgery. You can only forge cryptocurrency if you control more than 50% of the computers involved around the world. Now, I'll also point out, I will give this particular book by Dr. Karl Kruszenicki. Now that is a very good introduction to what crypto is all about. There's 20 odd chapters there. One of them covers Bitcoin and cryptocurrency. Very good introduction there. So I'll give Dr. Karl a plug there. Now, to make some cryptocurrencies, you need to invest energy to do the calculations. So this gives it legitimacy in the same way as you have to invest resources into mining gold. Gold, though, has other uses and a separate value because it is shiny and doesn't tarnish and does have some industrial uses. Crypto shares some things with gold and is claimed to be an alternative to regular currency. Now, some criticise Bitcoin because it uses electricity, but that's the point. It's valuable because of the resources involved in its creation. We could equally consider the resources involved in mining gold, generating pollutants, consuming diesel, etc. along the way. Further, there are incentives to develop green power and use power when it's cheaper, so it cuts both ways. Crypto may not all have all the benefits claimed, but any benefits could justify the energy involved. Now, Ethereum is a different Bitcoin and doesn't have an energy problem. It uses proof of stake, which doesn't involve energy, as does proof of work. So it's not as prominent as Bitcoin. You have Bitcoin with an energy problem and legitimacy, and Ethereum without an energy problem but lacking Bitcoin's reputation. Nevertheless, it does seem to me critics unfairly lump all these things together. For sure, there are actually lots of dodgy players in cryptocurrency who try to pump and dump currencies. In my own case, when I was looking around the crypto scene, I didn't want to buy any. I was just trying to see what the scene was about, understand the nature of financial injustice and justice in the world. Now, I was actually approached by so many unsolicited pitches from people that it actually put me off the scene. I thought, I think I'll just go back to my regular life. But that's the experience you can have. Now, advocates say speculators stabilise the currency, but in fact they also act to delegitimise it. There will be a problem until the legitimate side of crypto is obvious to the general public. While some claim crypto is used in criminal activity, credible sources say that's only 2% of its usage, which is actually less than regular currency. Now, in the drug trade, dollars are actually weighed to assess their value rather than being counted. And that's an interesting turnaround from historical coinage, which had the advantage that you didn't need to weigh it and you could count it. But there you go, that's the drug scene, I suppose. Now, there are tech-based single-issuer currencies, like when you use mobile phone credits as currency. And that's better than nothing, but it's validated by a single authority. There's also Reserve Bank digital currencies. They're still at the whim of a bank, or we might say the Reserve Bank, sitting in the spreadsheet of one computer rather than having the legitimacy of decentralisation. Crypto can help with international remittances and bringing banking services to the third world. Banks may be a problem, but without anything to do their job, it's even worse. If you're worried about how the control banks exert over us, crypto can help us escape it, but it's not clear there's such a problem. At times, the volatility of crypto could be less than a national currency, so there it could in fact be useful. Our financial system has issues like credit squeezes and recessions. The potential for people to hoard money when there's deflation. Banks can be arbitrary in their abuse of power, and there are cases where of fraud and identity theft where you can be caught in a Kafkaesque quagmire. Crypto is supposed to avoid these problems. I don't think the picture is so clear and wonder if crypto will have its own instabilities. I've yet to see a macroeconomic theory of cryptocurrency which looks at how the velocity of circulation, prices, interest rates, investment, unemployment, and so on will all fit together with cryptocurrency dominating. But another thing before I go to gold, it's interesting that for all the claimed worth of gold and crypto, people who sell you gold and crypto will accept payments in our regular dollars, which are meant to be the dodgy stuff that we shouldn't actually be using. So now we might sort of worry about gold. So there are supposed problems with the financial system which would be stabilised by a re-adoption of the gold standard. But also people recommend holding gold as a hedge against disruption in the financial system. Spain and Rome actually saw inflation in the purchasing power of gold when large amounts of gold were brought from the Americas and Egypt. Its value is also a function of its scarcity, and that can change. There's stories about bringing these ridiculously huge asteroids full of gold to Earth, and I think that would really plummet the value of gold if you actually could get them here. Now, Friedman, this gentleman here, now he was in fact against the gold standard and saw gold as too volatile. He actually felt that a properly managed currency system was superior. Another problem is that the rate of gold production can't keep up with growth in the global economy. Now, Friedman here, he thought that just as you could print too much money, you could also print too little and hold the economy back. It's an open question whether this would still be a problem with gold. Gold has a lower counterparty risk. For fiat currency, or the regular currency, gold, Gas will tell us more about that later, but for fiat currency, someone has to be willing to accept it as payment. However, gold is not totally immune. If there's a broader crash than just an economic or whatever crash, but a crash of society, and we end up with a world that's like Mad Max or something like that, either food or petrol could become more valued than gold. There's a necessary context for gold to retain its value. In other words, that civilization remains in something vaguely like the way we're understanding it. Now I'm going to go off on one of my tangents, which is to look at the ambiguities in our current economy, because I think with humanism, not only do we want to look at the numbers and the economics, but also some of the underlying ethical threads. So anyway, depending on how we look at it, we can see positives. People have jobs, the economy can grow, restaurant food and holidays are more affordable, and we can cure more diseases. But there's more to it. While some people have jobs, wages growth has been stagnant, with some people underemployed who would rather work more hours. There's the gig economy. For some, the ability to flexibly integrate work and leisure is a bonus. Others bear the burden of an irregular need for services. Tradies always worked the gig economy, but they negotiate with many clients directly, in contrast to where you actually have to look around for work. It's an echo of the Hungry Mile along Millers Point in Sydney, where people wanting to work on the ships would gather in crowds and just be selected or picked to do some work for the day. Now, further, GDP is propped up through population growth. While we've had years of growth, if you correct for population and go to per capita GDP, we've had some dips. Developers benefit while the rest of the economy does lurch forward, and the rest of us pay for it. Just as Ireland had its miracle, later found out to be a property bubble, overseas commentators see the Australian miracle built on population growth. Separately to utilities, insurance companies have become notorious for their carve-outs. Notably, damage due to bushfires is not covered unless it has been directly caused by flames. Similar things happen in the financial industry. The federal government believed the assurances made by the financial industry till the Royal Commission called them out. Less obvious but still insidious is the influence of groups like the Pharmacy Guild that covet their monopoly in providing prescription medicines while at the same time also sell herbal remedies. So getting back to our own lived experience, while once you could raise a family on one income, now it seems two incomes are necessary. Property values have increased in terms of the years of median income required to purchase a median value home. Increased population means less wealth per capita. However, it also means some costs can be shared again between more of us. And indeed, the value we get from white goods, appliances, computers, and to some degree cars, that can improve as we share those costs between more people. But things like traffic congestion and property prices are very different. There's hardly any cost to share there. Further, beaches are more crowded, along with our coastal retreats and bushwalks. There's increased noise pollution from aircraft, not to mention roads. There's light pollution. We can no longer see the night sky, and we are losing the ability to see the fifth star of the Southern Cross. And our children can no longer catch tadpoles at the local creek. But over the last few decades, at least in Sydney, there have been some improvements, and I have to engage with that. We've fixed photochemical smog. If you remember all that those decades ago, it was a problem. But what we did, we introduced unleaded petrol and put catalytic converters on cars, and so we got rid of photochemical smog. We've had improvements. But with increased car usage, we still have particulates to deal with. Unlike white goods, private school fees, along with other contested products and services, continue to rise in price. For quality public schools, their worth gets incorporated into nearby property prices. For some things, we cooperate and the market can capture some sort of ethical and fair resolution. But at other times, when we crawl over each other, the market feeds on our selfishness. Another positive is that we can cure more diseases. However, there's more antibiotic-resistant bugs helped by antibiotic-based industrial farming. Vaccination rates are dropping, meaning a decline in herd immunity, which affects us all. Air travel becomes cheaper and it becomes easier for outbreaks to travel worldwide. We also have climate change with bushfire seasons getting worse and a growing number of extinct animals. And you can see one extinct animal was the Maloney Cays, I think that's a possum north of far north Queensland. You can see there was a one-man protest that I had drawing attention to the Maloney Cays. Okay, growing number of extinct animals. There's an increased overhead between damage and insurance. Then there's international conflict and terrorism. We're supposed to have less global conflict, but my suspicion is that nevertheless financial impacts have increased. In sum, the world we live is a mixed blessing, and I think it's inherently ambiguous and difficult to come to grips with, but I think appreciating this mixture, I think, is a useful exercise. So now the next one we'll go to is productivity, growth, employment and GDP. Now you might have heard the maxim that we need economic growth to maintain employment. Now why is that? Now I was puzzling over this for quite some time before I actually found out the answer. Now as a first cut, economic growth needs to be half productivity growth and half actually making more stuff in order to maintain employment. Now, let's imagine that a firm no longer needs 1/10 of its workforce for the same amount of production, so they've got better at it. Now, that would mean that 10% of their workforce would become unemployed. But if they increase their production by 10%, then those people that would have become unemployed are now employed. So you can see there's this balance between productivity improvements and employment. Now, and of course, there's probably recurring fractions in there, so that's an approximation, so don't get into the maths too much on that example. Now, while some productivity growth is sought after as a policy matter, there's this productivity growth that happens in the background without us really trying to make it happen. And that background productivity growth is what needs to be compensated for by consuming more stuff in order to maintain employment. So that's why you need growth to maintain employment, to make up for the productivity growth that just happens in the background without us really trying. Now, unless we make serious changes, we need to consume more and more. Now, obviously, there are other things like low growth economics and sustainable economics. That's a sidetrack I can't go down. I guess this talk is probably long enough as it is. Now, some people call for productivity growth because it would make things cheaper and improve our quality of life. However, to have the trifecta, productivity, cheaper goods and sustained employment, we need to consume more. Some claim we'd improve productivity if only the government got out of the way so business could invest and innovate more. They imagine government only getting in the way, but I believe there's a lot more to the picture, and you could improve productivity by reducing destructive tendencies. One thing that improves productivity is the ratio of capital to labour. If we need fewer workers for the same amount of production, it could be the result of more and better factory equipment, that is capital, supporting the factory workers. The percentage growth in capital at the moment doesn't look good, but that does not allow for the decline in existing capital, the quality of new capital, the build-up of technical debt. Now, then there's too much economic activity in the property market as compared to the rest of the economy. Now, between capital and output, we've actually had this gentleman here, Dr. Ken Henry, former Secretary of the Australian Department of the Treasury. Now, he's actually identified the linkage in between. So we have capital, labour, and something called total factor productivity, which then gives us actual productivity. Now, as I say, Dr. Ken Henry has called this thing, total factor productivity, a measure of our ignorance. What actually happens in those factories and shops and so on around? Now, how is it that some processes can be better and result in productivity? We don't understand that because it's unrelated to capital, And to some degree, this is a thing in the middle, a fudge factor that goes from some numbers we measure, like capital and labour, to other things we measure, actual productivity, and how do we link them? We link them using total factor productivity. Now, going off another direction, there's smoking and gambling. I endorse the individual freedom to gamble, and you will even see me playing poker and blackjack at times. However, I see problems when sectors of our economy rely on people who are addicted to gambling and then vigorously advertise for it. Yes, there's personal freedom, but it's ridiculous to think that people become addicted to heroin by making a sovereign personal choice in the free market. Somewhat less controversial is the struggle that many of us make to lose weight. Hidden within total factor productivity, there's a possible host of negatives working in the background, dragging down productivity. Some have been previously identified, but I believe there's many others. So what are some of these things that are going on in the background? And I believe that things have basically gotten worse over the decades. Now, some of these things I point out, a few decades ago, we started to financialise the economy, which in principle made more things possible. But it also meant that the financial sector can basically siphon out wealth from the rest of the economy. So I've got some of the things there, and I will actually go into some of these causes as we move on. Now, one generally recognised cause is how our economy is now more service-based. If you manufacture, you can invest in capital, factory equipment, and improve productivity. But this is harder in a service economy where you don't have factories to do that. Still, some services can be profitable. The City of London provides services for the US economy. Maybe that's accessing tax havens and other dodgy stuff, but maybe some of the profits are actually ethical too. Services like radiography can add a lot of value, but they're a small part of the economy. So still, there are some possibilities from services. There's retail, a significant part of the economy, which has its part to play, even if there are more productive sectors. In transitioning to a service economy, globalisation should have meant that we had the benefit of comparative advantage, and the decline in manufacturing should have benefited us. There might well have been a benefit, but this was absorbed in the real estate and financial sectors of the economy rather than benefiting everyone. Still, there's economic complexity. This is the idea that we have more things going on, and that means a healthier economy. However, this is in opposition to the idea of comparative advantage, where we should do fewer things. Now, apart from declining manufacturing, one thing dominates the Australian economy, which pushes down our economic complexity, and that's mining. So if we go here to our next slide. Okay, now again, another thing from Dr. Ken Henry. Now, putting aside carbon impacts, for sure, mining does have its place. However, there's some subterranean effects at work. Now, this gentleman here, Dr. Ken Henry, noted that when the resources sector is booming too strongly, it actually damages the rest of the economy. At times, mining claims it's supporting the rest of Australia. And while this is partly true, it's also true because it's actively suppressing the contributions that other sectors might make. In fact, we could cope with a lack of economic complexity if we had a mineral resources rent tax and a future fund like they have in Norway to make up for this. Now, there's also historic and international context. In times long past, and I have to be vague here, but never mind, we had the red cancer of communism, which was oozing its way through Asia. I think you had the domino effect and those sorts of things. So that communism was going to eventually hit Australia, and we had to guard against it. So we were desperate to develop our mineral resources, and partly prompted by the US, we sold off our mineral resources for diddly squat, a legacy that has endured, and that's as compared to Norway. But getting back to services and the non-market or government sector, there's the NDIS. I would have hoped it would have increased people's ability to make worthwhile economic contributions, but it's been a struggle. So forgive me. However, there's a rubberiness in the measurement of productivity in the non-market sector. How do you know how productive a teacher is? If there's more children in a classroom, more students graduate, but they're of lower quality. If crime increases, maybe crime went up, or maybe police are now better at uncovering it, or maybe more is reported. If crime goes down, maybe it went down of its own accord, or maybe police are now better at preventing it. It's very easy to make claims about the non-market sector, but there's a lot of rubberiness in the neat graphs trotted out. Now, another thing is that there are increased overheads. So there's increased infrastructure overheads, with each growth stage making things harder. Now, there was a time when Sydney was struggling with water shortages, and then they built the Warragamba Dam, which we have here. We had water again, but we had to pump it further, increasing its costs, and there were also more pipes to maintain. To some degree, this was compensated for by growth in the economy that the dam serviced. But the point is that with each growth stage, the costs of provision increase. It becomes harder to expand city infrastructure. Retrofitting trains into an existing city is hard. Congestion costs increase, and equally it is harder to expand roads. Now, more than 20 years ago, an economist calculated that in 20 years, all the money spent on maintenance and construction of new infrastructure would have to be spent on maintenance, with no money left over for anything new. We're now living in that hell because it's more than 20 years since that calculation. Our cities are like an old block of units that need a lot more maintenance. To be sure, well, we haven't actually run out of money, but you can clearly see this sort of trend is another financial pressure into the mix. If the population is growing, it means you have to replace more infrastructure, and the more you're replacing, the more you're going to trip over yourself. We're forever driving past roads that are being ripped up or buildings being torn down, along with the odd pipe being fixed or replaced. In fact, Sydney's pipes lose about 10% of their water each year, but no government has fixed that problem. There's desalinated water, but it's expensive. Bob Carr called desalinated water bottled electricity. The construction industry has degenerated, and the Opal Tower is the most telling example. But many units offered for sale have faults, with the builder since having shot through or declared themselves bankrupt, or perhaps there's ongoing legal issues. Now I'm going to talk about businesses abusing their power more than they've done in the past. You have toll booth capitalism, for example, the air route between Sydney and Melbourne. I think it's one of the 3 most lucrative air routes in the world. But more broadly, business sets up a bottleneck and then charges you to get through it, or the business is much more extractive than productive. There's monopolies that develop, by definition, resistant to competition. For example, ticketing providers have the venues and international acts sewn up at the same time, and are large enough and established enough to abuse their position and ward off competition. That's a prominent example, but there's many others. There's an over-reliance on marketing and manipulation of the customer rather than value delivery. There are attempts to corral people and lock you into their own service centres rather than a broader market, or sell you goods with planned obsolescence or that are harder to repair. Houses now have display furniture installed, changed from the past. While selling costs might have dropped, improving productivity, this has been absorbed into an increased overhead. There's destructive and competitive advertising. When tobacco advertising was banned in the US, company profits actually increased because advertising was not so much letting consumers know your product was available, but rather a battle for market share. You see this dynamic all over. Yes, advertising can let us know what's available, but it can also increase prices and reduce productivity. For some economic activity, we can wonder whether it is an enabler or just a parasitic overhead, monetising the results of a battle between other parties, just like armaments manufacturers selling to both sides of a war. There's more advanced advertising, markets in behavioural futures, where identities are sold, not as passive newspapers readers, but rather as psychologically profiled customers with a well-defined chance of responding to your pitch. Over time, competitive pressure means more and more firms adopt this approach, and it becomes an overhead that drags down productivity, not to mention its assault on personal sovereignty. There's a saying that if Facebook has 100 of your likes, they can predict your behaviour better than you can. And if you're accessing a website and can't identify the product, then it probably means that you are the product. Okay, another one is our relationship with labour. So-called labour market flexibility has meant an increased employee turnover. In any given office, there are now fewer experienced people. We have a decline in the community skills dividend, which undermines any productivity improvement. It's related to the false promise that processes can replace experience. COVID was spread because employees felt obliged to work at multiple nursing homes, a definite community cost to supposed labour market flexibility. Not so much employee turnover, but perhaps you've noticed the increased turnover of shops, or indeed suburbs and shopping centres with shop fronts vacant for years. In principle, this is creative destruction, with those better shops surviving, but it seems to me there's now more waste in getting those better shops to survive the process. Technology is being used as an excuse to abuse workers, just like during the Industrial Revolution, when companies like Uber and Amazon claiming to have left the past behind them, but they're still abusing workers to maximise profit, as firms have always done in the past. There's bullshit jobs. Companies do not always move towards greater efficiency with jobs with either less social or economic worth growing all the time. Then there's the abuse of skill shortages and immigration. I don't believe immigration has ever solved any supposed skill shortage. It removes the incentives to increase wages or for local people to work in that industry and get training. Maybe it's just code for skilled labour being more expensive than employers would like it to be, along with an unwillingness to train people. During COVID, the RBA actually stopped employers from raising wages to attract more staff. It was their natural response and a reminder of just how much we rely on imported labour. There's not just NDIS, but also pensions and super. There's the short-term fix of bringing in people to lower the average age, which is one of the justifications for immigration. But as they age, you need to bring ever more people, and it's like a Ponzi scheme. Still, some nations where it's cheaper to train nurses and other professions train them with the expectation they will work overseas and send money home. So sometimes maybe this sort of thing does actually benefit both nations. Now, with growth, there's more externalities. A growing school employs more people who end up parking on local streets and displacing residents. In pursuit of higher profits, companies use larger trucks. When delivering in narrow streets, they hold up traffic, and we may one day see a fatality because they blocked access by an emergency vehicle. Locally, we in North Ryde have had an Aldi shop which was opened controversially with the assurance they would not send large trucks down the suburban streets. But once it was completed, they did indeed send those large trucks down suburban streets, not what they said they'd do. Companies ignoring their undertakings have become commonplace. But businesses with power can also abuse other businesses. It's not just the community. Retailers have to rip up perfectly good tiles and refurbish their shops every so often at their own expense. They're obliged to get many different certifications at their own expense. I understand it's different in light industry sites where all tenants pay the same fixed rate and you're pretty much left alone. Now there's our relationship with government, which has declined. I have my own criticisms about the growth in needless bureaucrats, the calculation of irrelevant numbers nobody ever looks at, or poor risk management with a cover-your-arse approach. Still, we've also had growth in narky bureaucracy by corporations and not just government. So I will emphasise government does not have a monopoly on onerous bureaucracy. But I don't endorse the idea of reducing government involvement and then it will solve many problems. Rather, I believe government can do things better with many problems resulting from a failure to think things through along with ideological and corporate distortions. We have regulatory capture, where a department does not regulate on behalf of the electorate, but rather companies that extract privilege. It's partly the result of lobbying. Now, lobbying can be about helping the government to be realistic, but it can also diminish the government's worthwhile initiatives or make particular carve-outs. It also undermines one vote, one value, with corporations having more influence than the individual voter. Further, the presence of lobbyists suggests that the government is not well resourced enough to figure out for themselves what's best. It's a strange contrast to parties going into election claiming that they've got a solid plan. At other times, the public service has been hollowed out, no longer able to effectively regulate the industry it's involved with. It would do so if they had the resources. Or else there's a lack of willingness to employ people with industry experience, not for policy work, but to do things like construction or building maintenance. You have the revolving door between people in government and those later working in the industry that they were supposed to supervise. We have examples like the property lobby that was pushing back against working from home, or gas exporters talking big about gas being used domestically, while they also got us into a bind all those years ago with gas exports. There's also grey corruption around zoning changes, as identified by Dr. Cameron Murray. Now we're getting to our conclusion. Now, I've looked at rather a lot and I acknowledge my influences. Some people I'll mention by first name are Mark, Tim, Garth and Andrew. There have been various economists I've mentioned along the way. There's Jean Tunney, who hosts the Economics Explored podcast and has been very supportive, even though we have somewhat different perspectives. I'd also better acknowledge that numbers, it takes some time to develop a perspective. I'm certainly hopeful about what I've done. But one thing I will say, pushing back, while I don't have the numbers, it does seem to me presumptive that the advocates for lower government regulation, lower taxes and so on, assume there's a very simple relationship leading to productivity which suits their ideology. I can see clearly that there's a lot more to the picture, and such leaps of logic seem even more convenient than any you'd accuse me of. And note, along the way, while being measured, I've noted problems associated with excessive government spending. At the same time, I've also noted how many policies seem to have the cumulative effect of benefiting the asset-owning class at the expense of others. So in any case, this brings me to the end, and I do hope you found my talk interesting and that it's covered some things that have been of interest to you. So, thank you.
Very good.